Hello everyone, this is Yuvraj, working as assistant professor in the Department of Commerce, DM and DM, as a digital marketing data mining. Today now we're going to see about the topic of banking risks. So what are the risks in the banking? Now we're going to see about the banking risk. So under that is an introduction. Banking risk involves uncertainties that can impact a bank's health and operations. Understanding these risks helps banks stay safe and sound in a competitive market. This presentation will walk you through what banking risk is, the type of risk banks face, and why reporting these risks matter for decision making and trust. So again I'm repeating is decision making and trust. So under that the first one is risk. Understanding banking risk. So what are the risks in there? Types of banking risk. So what are the types of banking risks there? Banks faces various risks like credit risk, which is the chance borrowers won't pay bank loans. It's a credit risk. So we will credit the amount to the person, certain person for the bank loans. There's also market risk related to change in market prices, and operational risk, which covers internal failures like system backdowns, system breakdowns, or fraud. So there's so many frauds are there. So knowing these helps bank managers their challenges better. So knowing these helps bank manage their challenge better. So why bank needs risk reporting? See, risk reporting is critical because it helps banks track potential problems early. It ensures transparency and boosts confidence among investors and clear regulators. Clear reports also guide better decision, helping banks protect their money and customers. It's all about staying ahead of risk before the growth. So again repeating, my bank needs a report. All staying heads of risk before their growth. It is why banks needs a reporting. So next is tools for risk measurement. So what is the tools for risk measurement? Banks use various tools to measure risk effectively. These includes risk models that predict potential losses, stress testing, see how risk perform under extreme conditions, and risk dashboard that visualize key metrics in real time. Using these tools help banks stay prepared and make smart decisions to keep risk under control. So risk under control, they're going to keep it in the tools for risk measurement. Second one is reporting process and best practices. So reporting process and best practices. So now we're going to see about collecting and analyzing risk data. Collecting accurate risk data is the first step in solid reporting. Banks gathers information from loans, market trends, and internal systems. They analyze these data to identify patterns and potential threats. Good data collection and analysis ensure that reports are reliable and actionable for risk management. Is a risk management that is known as risk management. Now, designing clear risk report. So now we're going to designing about clear reports. Effective risk reports should be simple and clear, using visual likes, charts, and graphs makes complex information easier to understand. Reports should focus on key risk, impact, and trends. Clear reports help everyone from executives to regulators quickly grasp and bank risk this situation. Now, communicating risk to stakeholders. So we have a communicating risk to stakeholders between them. Sharing risk information with stakeholders build trust. Communication should be transparent and tailored to the audience needs, whether they are employees, investors, or regulators. Regular and honest updates help everyone stay informed and elegant in managing banking risk is a communicating risk and stakeholders. Now we came for the conclusion point. Now we came for the point of conclusion. Understanding Understanding and reporting bank risk is essential for keeping banks healthy and trustworthy. Using the right tools, clear process, and good communication support smart decision and transparency. When banks handle the risk well, they protect their customers and strengthen their position in the market. So thank you.